All right, let's get right into it. Welcome to this explainer where we are going to completely unpack the ICAI Foundation Course Blueprint for Paper 1, Accounting. We're looking specifically at the syllabus relevant for May 2025 and onwards. So if you're gearing up for your exams, or if you just really want to understand the modern framework of accounting education in India, you are the exact right place. We're going to treat this syllabus not just as some dry list of topics to cross off, but as an architectural blueprint for your entire professional career.
This official study material, designed by the Board of Studies, well, it isn't just about passing a test. It's built to synchronize your skills with international standards, making you a globally competitive accounting professional. Now, you need to notice right away that Paper 1 is a 100-mark, 3-hour subjective paper. And that word subjective is your first major hurdle. It means there's no blindly guessing multiple choice options here. You literally have to write out your solutions, clearly showcase your workings, and actually prove your understanding of every single step.
And that ties perfectly into the National Education Policy 2020 initiative, which has a specific mandate here: conceptual clarity rather than rote learning. Because this is a subjective paper, guys. If you just memorize that, debit means in and credit means out, you are going to get completely stuck the second a complex real-world transaction hits your desk. You have to understand the why behind the numbers. Why does an asset increase on the debit side? Why do we treat advanced income as a liability? We are going to focus heavily on that why today because that's the real secret to passing.
Here is our agenda for this explainer. First, the professional blueprint. Second, Module 1, the conceptual framework. Third, the core accounting process. Fourth, mastering asset valuation. Fifth, finalizing sole proprietor accounts. And finally, number 6, Module 2, specialized entities. Let's jump in.
Starting with number 1, the accounting professional blueprint, setting the foundation.
So let's look at what the syllabus actually expects from you. Your primary goal isn't just to memorize theory. The syllabus explicitly states that you must actively apply accounting principles to solve problems and prepare real-world financial statements for various types of entities. Think of it like this: you are learning to be a financial storyteller. You're taking raw, chaotic, everyday business data and organizing it into clear, structured statements that investors, banks, and owners can actually understand. And examiners, they are looking very closely at how well you construct that story on paper.
Moving right along to Section 2. Module 1, the conceptual framework, the bedrock of accounting.
This module lays the absolute theoretical groundwork for everything that follows. If your concepts are weak here, your final accounts are just never going to balance. You have to master crucial distinctions, like accurately categorizing capital versus revenue items. Here is a really great memory trick for you. Capital creates capacity, revenue runs it. Let's say you buy a massive delivery truck. That creates your capacity to deliver, right? That's capital expenditure, giving you long-term economic benefit. But buying the daily fuel and paying for the annual oil changes, that just runs the truck. That's revenue expenditure, which is consumed in the current year. Mixing these up will completely distort a company's profits. Oh, and in this same framework, you'll also dive into contingent assets and liabilities, which are essentially potential outcomes that depend on future events, kind of like a pending lawsuit.
Next up is Section 3, the core accounting process, the daily engine.
Once your theoretical bedrock is set, Chapter 2 introduces the daily bookkeeping engine that tracks the flow of money. You'll learn the exact sequence of the accounting cycle. First, you record double-entry transactions chronologically in the journal. Next, you post those entries to ledger accounts, grouping all the transactions by their specific categories. And finally, you summarize those ledger balances into a trial balance to check your mathematical accuracy. To remember this sequence, just log the balances: journal, ledger, trial balance. If your debits do not equal your credits in that final step, well, you've got a mathematical error you need to hunt down.
Now, to handle large volumes of data efficiently as a business grows, you obviously can't journal every single tiny transaction. It would take forever. So you'll learn to categorize specific, repetitive transactions into subsidiary books. All cash and bank transactions go strictly into the cash book, all credit purchases go into the purchases book, and so on. This divides the labor and keeps your main journal nice and clean. You're also going to learn the absolutely critical skill of rectifying errors. Because, let's be real, accountants don't get to use erasers. You need to know how to legally and accurately fix mistakes using compensating entries.
Moving to Section 4, Mastering Asset Valuation, Ensuring Accuracy.
Chapters 3 through 5 tackle highly tested areas where adjustments are absolutely critical. Let's talk about bank reconciliation statements, or BRS. This solves a super common real-world headache.
Imagine you write a check to a supplier on March 30th and you deduct it from your cash book, but the supplier doesn't actually cash it at the bank until April 5th. On March 31st, your records and the bank's records are not going to match. The BRS is simply the procedure to systematically explain these timing differences, fix any mismatches, and figure out exactly what your true bank balance is.
You're also going to dive into the exact basis for valuing assets. For inventories, you'll apply the principle of conservatism, which means valuing your stock at the lower of cost or net realizable value. This ensures businesses don't overstate how much they're actually worth. For tangible assets, you calculate depreciation, and for intangible assets, it's amortization. You'll master methods like straight line and written down value. And hey, major exam focus area right here. You absolutely must know how to account for it when management decides to change their depreciation method midway through an asset's life. Examiners absolutely love testing that transition.
All right, Section 5, Finalizing Sole Proprietor Accounts, the complete picture. So, in Chapter 6 and 7, we transition from just gathering data to actually finalizing the accounts. But right before we build those final accounts, Chapter 6 focuses on specific commercial credit instruments, like bills of exchange and promissory notes. This is a very frequent source of exam questions for sure. You'll need to know the journal entries for drawing a bill, discounting it to get cash early, or dealing with dishonored bills. You'll also explore accommodation bills. Think of this like two friends writing IOUs to each other just so one of them can take that piece of paper to a bank and get a temporary cash advance. It's not for a trade, it's just a mutual financing favor.
And then, Chapter 7. This is where the story of the financial year gets published. It's the grand finale of Module 1. You take your trial balance, apply closing adjustment entries, and build the final financial statements. You start with the trading account to find your gross profit, then move to the profit and loss account for your net profit, and finally, the balance sheet. But let me warn you, if you messed up your capital versus revenue concepts way back in Chapter 1, this balance sheet will never, ever tally. You'll be mastering this process for both manufacturing and standard non-manufacturing businesses.
Which brings us to Section 6, Module 2, Specialized Entities, Expanding the Architecture.
Once you've got the foundational framework from Module 1 flawlessly mastered, Module 2 takes those skills and applies them to specialized organizational structures. You'll see a really clear progression in complexity here. You start with not-for-profit organizations. Then you tackle deriving final accounts from incomplete records, where you're basically a financial detective piecing together profits from half-destroyed receipts or single-entry scribbles. From there, you move up to complex partnerships, limited liability partnerships, and ultimately, corporate company accounts.
The absolute key when switching between these entity types is understanding their core motives. For instance, you have to clearly understand the difference between preparing a standard profit and loss account for a commercial business versus an income and expenditure account for a not-for-profit, like a hospital or a local sports club. NPOs do not exist to make a profit, they generate a surplus or a deficit. Let me tell you, using the word profit in an NPO question is an instant markdown in your exams. You'll be transforming raw receipt and payment summaries into proper accrual-based statements.
Finally, we reach the boss level of the syllabus, company accounts. The focus shifts heavily to corporate equity here, and it is massively exam relevant. You'll be tested on the entire life cycle of a share, from the initial public issue and calling for money in installments, to the forfeiture of shares when a shareholder fails to pay, and then the complex reissue of those canceled shares at a discount. You'll also learn the accounting mechanics for redeeming preference shares, issuing debt via debentures, and rewarding existing shareholders through bonus and right issues. It's a huge, deeply logical chapter. So as you prepare for your upcoming exams, remember this. Passing Paper 1 isn't just about clearing a hurdle. You're not just memorizing formulas for a single test. From basic journal entries to bank reconciliations, all the way up to complex corporate share forfeitures, every single topic in this blueprint is designed to build the literal bedrock of your entire chartered accountancy career. Focus on the why behind the transactions, embrace the logic, and you'll absolutely master this. But ask yourself this before you dive into the books. If a single misclassified expense can completely alter a multi-million-dollar company's balance sheet, are you ready for the responsibility of being the one holding the pen? Thanks for joining me on this explainer, and happy studying!